And these important topics, we need to review some key points and essential concepts together here. You see, you may have attended a few more different courses or learned a variety of different techniques and methods. In designing algorithms that operate purely on technical analysis, risk management is extremely important. That is, when you want to design that robot or algorithm for the long-term market based on technical methods, you need a very powerful risk management system to cover that gap as much as possible. But still, we won't have a win rate of 190 or 80 in this way. As I said, it might happen temporarily, but it won't always be the case. The point I want to make here is that, look, in technical analysis, you might say, for example, I want to do day trading. Or for example, I want to do scalping. Even the person who does scalping and the one who wants to do day trading, it really makes no difference. If you don't know the fundamentals, you might come in that day and do a technical trade for day trading. You enter a position and it doesn't move, or some news has come out and it's after the news. If you don't understand what this news is referring to, or which direction it has pushed the market sentiment for the long term, you might enter based on the market's short-term sentiment. I want to start at this point, meaning from this layer, and go deeper down from this trend to see what happens at this point, which is right here, and enter the trade with a small stop about 8 pips, which I'll explain the reasons for later in the lesson. In the trend trading section, as you'll see, actions or medium-term movements, and then we have minor trends. So the market has 3 types of movements. We will look at it this way. Our primary trend will be on the daily time frame. Our secondary trend will be on H1, and in the specific case of trend trading style, this will be on the 10-minute time frame. But we don't work with this time frame. We want to enter trades 1 phase lower on the 1-minute time frame, which we will teach later, how to use volume filtration in this time frame, meaning the 1-minute candle itself is not useful for us. We want to use the filtered volumes on the 1-minute time frame to identify the exact point where the algorithms get activated. Now, the primary trend phase we mentioned, in the distribution phase actually, the distribution phase is when those same informed investors, or what we call smart money, start selling their positions to the general public. How does this happen? The media is one part of it. For example, news comes out that the S&P has closed positive for 9 consecutive weeks. Or, I don't know, people say a certain market is really hot, things like that. But when you look at the chart, you see that it's at the end of its movement. When the chart is at the end of these moves, you notice that a lot of the news isn't related to fundamental data. In other words, the media is just talking. And the last 6th point, trends continue until definite signals confirm that they have ended. In other words, as long as you have not received a signal indicating that the trend is ending, the trend will continue. So, if you are in long-term positions, or you are taking a longer-term approach, or you have built a pyramid, as long as you have not received a signal indicating that the market is going to go down, these signals can include all kinds of data, not just a single signal that tells you to go short right now. Fundamental data, sentiment, all of these point to this. For example, if the volume trend is decreasing during an upward movement, these are signs that the trend is clearly getting exhausted and is about to change direction and reverse. So what we need to pay close attention to is that we should stay in the trend until we receive definite signals. In fact, the market is generally considered to typically be in a trend unless there are clear and significant signs indicating that the trend is coming to an end.